Good. Right. Now let's come home and talk about a company which actually is a major user or implementer of said ERP packages like SAP, and that is EOH. It's the largest in that market here in South Africa. It has a client base which spans private and public sectors. Market cap of 15.2 billion rand, PE ratio 12.73, dividend yield of 1.82. But I want to put the share chart up immediately because you'll see that right up there at the end, it's got a nasty sag going on. So as far as the situation here is concerned, this is under Asher Babot, an absolutely spectacular market leader, market grower. What's gone wrong and why does the share chart look like that?
Well, a few things have conspired against EOH. I think firstly, the CEO abruptly stepped back.
Yeah.
Secondly, there were allegations of bribery or getting contracts in nefarious
involving
ways.
One or two businesses which they acquired and have since sort of integrated, as they often do, into their portfolio.
Correct, and led to other businesses getting more business from the private, the public sector rather. You had a very high share price implying high expectations, which is never a good starting point. And then you had a business model which did show organic growth and still showing organic growth. The latest trading update shows 10 to 20% growth in HEPS for this period now.
Yeah, exactly. Good numbers.
But people were used to higher growth, and that high growth came not just from organic growth, but acquisitive growth as well. And using the high share price as a currency to buy these businesses.
There's the correct share chart.
So the problem is now the second part of the growth story. They can't use the paper to the same extent when it's on a 12 PE to buy
because no one wants to get bought, or do you think they've bought everything that was to be had, or just the fact that the paper is not as highly rated as it was before?
Well, because the paper is not as highly rated, but also trees don't grow to the sky. They have such significant size now that to make an acquisition to move the dial becomes increasingly hard.
Yeah. The new CEO, though, comes out of the ranks. I must say, I was impressed. I thought that the results would just be an all-fall-down scenario, because you know how it sometimes goes when you've been an absolute winner and then things start going wrong, you know, then things kind of get unfolded. But so far, so good. I don't know, is this a buying opportunity, or are you going to steer clear?
It's a tricky one, because in my mind, EOH actually isn't yet one organization. They haven't really integrated all these different solutions. And that in the past has been good, because that leaves each team incentivized, making its own tuck-in acquisitions, growing its own little business in the big business. But it also means it's more difficult to go to a corporate and have a suite of products under the EOH brand with one team. Or to Monday you have the desktop support team. Tuesday you have the data center team. Wednesday you have the servicing team. And people who don't even know each other working all for EOH means that they need to integrate the businesses a bit more.
Look, they've also been very successful to date in just letting those guys run. But it should also be pointed out that, notwithstanding what I said earlier about how everybody always just wants to spend on business IT, this is not an easy environment in our economy right now. There has been a widespread corporate slowdown because people are very anxious about the corporate outlook and the governmental outlook and the politics and the currency and the sovereign rating and all of that stuff. And everybody is saying, you know what, let's wait and see what happens in December with the ANC's national conference. We'll then decide whether to spend that 10 million rand on a totally new IT system. Until then, we'll just battle along with the old one. So
correct. Investment has been deferred. Confidence is low. That's not great for companies like EOH, where it's a cost line for most companies. When you do your budget, you look at that cost line and say, can't we cut costs here? Can't we spend less? Can't we give EOH less revenue next year? So that is a concern. The lower growth, it's still growth. With this PE, it's a tricky one at this price, just above 100 rand.
You're going to pause and say,
I'm going to pause, yes.
Yeah, me too. Okay, good.